using digital and spending money on digital to hopefully get people to go in through the top of the funnel, come out the bottom, and maybe become a client.
We define business development as being marketing, sales, and customer service. And marketing is what generates the leads. Sales turns leads into revenue. And customer service keeps the revenue coming.
When you speak to a lot of people who own businesses and you ask them things like ideal client profile, they can't really clarify that.
What we do is help businesses understand that this continuum is where the market is, and your marketing efforts are meant to move buyers along that continuum.
Hello, everyone, and welcome. My name is Paul Palumbo. I'm the host of the Palumbo Podcast, where we interview some of the most successful founders of businesses or professionals who are involved in helping founders continue to be successful and also help them exit successfully as well. Today, we're lucky to have with us Matthew Pohl, is the co-founder and managing partner of the ReWild Group, a firm that sits at the intersection of behavioral science and business performance. For more than 2 decades, Matthew has worked with founders, CEOs, and leadership teams to help them scale more effectively, not just through strategy, but understanding the human behavior that actually drives results. At ReWild, he's helped companies unlock growth by aligning incentives, decision-making, and culture with how people truly operate, not how we assume they do. His work blends economics, psychology, and real-world execution, giving leaders a practical edge in building more resilient, high-performing organizations. In this conversation, we're going to dig into what really motivates teams, how founders can avoid the hidden traps that stall growth, and how to design a business that performs at a higher level without burning out the people behind it. So, Matt, thanks for your time today. Really appreciate this.
Yeah, Phil, thanks for having me on today.
Yes, of course. So if you want, Matt, if you want to give your own summary of exactly what you do and how you help founders, I think that'd be great.
Yeah, so my story begins as an entrepreneur myself, founding my own business in mid-30s. My business partner is my wife, and so we set off to, make our impact on the world. And, it was a challenging journey, like pretty much every business owner has gone through. Months without pay, good clients, bad clients. 12 years into that business, we had built a solid business, but we'd kind of become stuck. We had hit this revenue cap that we just couldn't seem to crack through. And we had oscillated between 8 and 12 employees during those years. But, at the same time, we built a good business. It was paying the bills, it was providing for our family and our 4 small children. And it was at that point that we had our business valued for the first time. And to be fair, I hadn't thought about building the business in order to sell it. That really hadn't crossed my mind. And so when we got the valuation, like most business owners, the first time you get that valuation, it was not nearly what we had hoped we had created over that dozen-year period. And so it's kind of a wake-up call, really. We realized we could continue to run the business the same way. Like I said, made a nice living off of it. It was a nice lifestyle business. But we realized we had a decade or more of work years in front of us and said, okay, well, we're going to be here doing something. We enjoy running the business. And we have a decision to make. Continue status quo, good, solid lifestyle business, or change things up. And so we really took that a bit of a leap of faith to say, okay, let's change things up. Let's see if we can build something that has transferable value. And that's really started off this journey of figuring out, how do you really grow a business? And fortunately, I had another CEO that I knew who handed me a book called Navigating the Growth Curve. And it explained how businesses go through these 7 stages of growth. And when I looked at it in more detail, it's like, well, I could see we're in stage 1. And as I started to decipher the rules that the book proposed for stage 1, I realized that we were misaligned on a number of them. Oddly enough, I looked for the author, and he turned out to be living just a few miles from me here in the Denver area. And so I hooked up with him. I spent about a year with him through coaching and just really understanding more details than what I could get out of the book on my own. Between year 12 and year 15, our business totally changed. We tripled in revenue. Again, this was a business that had been stuck at a revenue ceiling for about a decade. So we
Wow.
tripled that revenue. We more than tripled our number of employees. We went through what the book calls stage 1 into stage 2, through stage 3, and we're just entering stage 4 when we had a competitor come and give us an offer to buy the business as a platform company. And so we exited the business at year 15. And what was pretty incredible to see is that between year 12 and year 15, that first valuation in what we actually sold the business for, there was a 10x multiple of what that business was previously valued at. So it was a great exit. It really was planets aligning, but it was a great situation. But a lot of it was we turned our lifestyle business into what we consider an exceptional business, something that really stands out. It became less owner-centric. It was now enterprise-centric. We had built a team and process, values, all the things, all these structures that businesses need. Coming out of that exit, instead of retiring, I ended up acquiring all the research and IP of this author because it had impacted my business so much. And I've turned that now into a system that's being used by independent consultants around the globe to impact small and mid-sized businesses.
That's terrific. So what I want to do is I want to first, what I always love talking about is talk about this growth that you had and talk about just growth in general, right? So what
Right.
else, when you think about growing a business like you just talked about, I mean, that makes every company owner eyes light up. And so what do you,
Right.
how would you talk to me about growth of a business? How do you coach people and how they should be growing their business? What are the key parts?
Well, I think part of it as a business owner in year 12, I was when I thought of growth, it was pretty much top line growth, right? It was like, how do I bring in more revenue? And obviously that's a big part of business growth, but it's kind of like, one analogy is when you're manufacturing a car, you can try to test for quality at the end, or you can build quality throughout the process so that when the vehicle is done, the quality is already there. And in the 1990s, Japanese manufacturers versus American manufacturers of automobiles, they had those two different kind of perspectives. And so sometimes I think revenue is seen as this thing in and of itself, that revenue, you just focus on revenue. But there's really a lot of things that contribute to allowing your business to generate more revenue. And so one of the things that was holding me back was I was misaligned in a set of rules that needs, like a best practices that need to be followed. I was in stage 1. In stage 1, you can prioritize these 3 items: profit, people, and process in a certain way. And profit, process, and people, those are all 3 important, but depending on your stage of growth, there's a different prioritization that you need to use. And I had those prioritizations off for stage 1. I needed to have profit to be my number 1 focus. I'm a data scientist, so I was a process kind of guy. And so I figured I'll just build the best mousetrap and the money will come, build and they will come kind of a mindset. And this roadmap said, no, you're off. You're not aligned with the rules for stage 1. So I had to put my top energy on profit. So growing revenue that was profitable. And so it totally changed how I allocated my time and how I allocated the team's time. And just as a simple example, my business, there was professional services in the legal industry. And so our clients were attorneys. When we got a proposal through our website, most people contacting us had never heard of us. We just had a good name. They found our website. They called us. Well, we didn't win a lot of those because they didn't know us. what we did is when we changed the mindset, the prioritization to focus on profit, I turned all of my team into everybody had business development responsibilities. So the folks on our call center who would normally be answering calls coming in from clients, we turned those into outbound call center. We made 15,000 outbound calls to attorneys across the country as part of our business development strategy. And in a year, we went from getting one or two proposals a month to one every day of the month. And those people calling us went from, I've never heard of you, I just stumbled onto your website, to, hey, I've heard of your name, somebody referred you to us, that kind of a thing. That was really the biggest from just a simple revenue standpoint. But it took more than just generating the revenue. You had to have the people, the team, the structures to allow that business to triple in those 3 years without dropping the ball, without a loss of quality. So it's more than just revenue, but that was a big thing that got us kind of off of that, in that stuck position, to being unstuck.
Right. So when you think about most businesses out there, it doesn't really matter what business you're in, right? So like we break down marketing in a couple of different silos. For example, one silo is referrals, so like word of mouth, and that's a big part. That's probably 80% of our business. And then let's say word of mouth, right, type stuff, and that's stuff that will just pretty much flow to you just because you're good at what you do and people respect you and people ask your clients and about you, et cetera. Then the second silo would be center of influences, right? So what center of influences, whether it's an attorney or an accountant, they're out there working with the type of clients that I want to work with, and vice versa for them, right? So that's the other silo. And so there are different silos that you can think about as it relates to marketing. And then once you kind of get through those warm silos, right? Because for example, me hanging out with an accountant and playing golf with an attorney, that's all kind of warm relationships. Then there has to be this cold component, which you just talked about for your business, which is the 15,000 outbound calls that generated those leads for you. And so, and for any business, then it's that happens from using digital today specifically, right? Using digital and spending money on digital to hopefully get people to go in through the top of the funnel, come out the bottom, and maybe become a client. But then the question is what's the right amount of money to spend on that type of stuff? And people get nervous about that because they're, all right, $200,000 in my own personal account to buy real estate, or $200,000 to invest in this area here. So talk to me about, so if I know you know what I'm talking about. So, or saying rather, talk me through like what I'm saying, what it means to you, and how you coach owners of businesses.
Yeah, so I would say, again, that focusing on revenue for growth, that's obviously a big part of achieving growth, right? You have to generate more revenue. But there's other foundational structures that need to be in place, principles, ideas that you have to have clarity on to be effective in that. So it goes to things like, what's your business model? What are your offerings? Where are you making your margins? So if you're going to spend money to sell something, you want it to be the thing or the handful of things that generate the highest margin. You'll do other things, but you want to bring in work for the things that make you the most margin. So understand your business model. What are your customer segments? Who are the main kinds of people, the ICP, the ideal client profiles that you should be reaching out to, and what are their needs so you can be talking to them in the right way, as opposed to just having one generic message that you're throwing out there. What differentiates yourself? What are your brand values? How are you distinguished in the market? What makes you different and better? So these are things that kind of undergird your marketing effort. If you're just going out there and talking to a lot of people, but your message isn't clear, it's not understandable why you're better, that you're selling things that actually make you margin and profit, then that's not going to be a good investment. You'll just be throwing money at the problem, hoping that you get success. So understanding that and understanding what stage of growth you're in really helps you also understand the underlying hidden barriers to growth. And if you're misaligned there, again, it's very hard to sustain that growth because you're focused on the wrong areas, you're leading in the wrong way, you don't have these underlying structures to support growth. And so to me, the focus just on marketing for growth, that's definitely a part of it, but it's a bit simplistic in my mind. You have to have these other components in place for that to be effective. And then I should say, one thing we distinguish, and I think it's critical, is this umbrella called business development. That term is kind of a generic term. And so we define business development as being marketing, sales, and customer service. And marketing is what generates the leads. Sales turns leads into revenue, and customer service keeps the revenue coming. And sometimes all those terms, all those functions kind of get thrown into one pot. And when they're kind of intermixed and they're not clear how they work together and what functions and roles they have, it also tends to mute the the results.
You're right about that. And last time we spoke, you actually separated out in like buckets, and I thought it was extremely helpful. And what we're talking about now specifically is marketing. And I think when you speak to a lot of people who own businesses and you specifically ask them things like your ICP, right, ideal client profile, I think you get kind of like like they start stuttering, like they can't really clarify that. And then when you talk about customer segments, what that looks like, they don't really have a spreadsheet or whatever. Most businesses, don't really have these things. What's interesting, we're big private equity investors, and when you look at some of these opportunities, that when I speak to these private equity investors, they talk about investing. They love investing in family businesses because many of these family businesses, they're really just like their heads in the sand, and they have no idea who their ideal client profile looks like in the segmenting approach, and even having a CRM and the most simplistic things of running a business. And that's why these guys go in there, they increase and enhance operational efficiencies, and next thing you know, like your business, right, it's just up tremendously. So, but in regards to what you're saying is before you build a marketing plan, you should have an idea of your business model, margins, and ICP, which essentially is like you're saying is what's your niche. So how important is it that, like, for example, if you asked me, hey, Phil, who's your ideal client profile? It's founders who are exiting their business. We help them pre-exit and post-exit, right? That's who I work with. That's who I want to work with. That's who we work with best. There's so much, there's a lot of comprehensive planning that's involved with them. So I can define that, right? But most people can't. But how important it is to business success to be able to define your niche?
Well, again, this goes back to your business model. If you don't know what services you're providing and can't really communicate that effectively, and you don't know who ideally would buy those services, it's very hard to grow your business unless you're a gas station, right? I mean, a gas station really doesn't have to worry about knowing their ICP, right? I mean, because it's a known need, it's a simple purchase, it's a B2C kind of transaction, and you're just trying to get a lot of volume. And so again, that's a business model, and that's fine. That works for the gas station. But if you're in professional services, wealth management being one of those, but attorneys, accountants, any kind of B2B service or B to business owner service, you have to be very clear of what is it that you're doing. If you can't describe that clearly, those would be like your offerings, and you don't understand the economics behind them, what truly is profitable, and then who's going to be buying that from you and why. What's the pain points behind their decision to use you or to need this service in general? It's very difficult to communicate because you're not selling gasoline, you're not selling milk and eggs, right? These commodities. You have a unique service, and there's so many options out there in the market. If you can't describe what you're doing, those are the inputs into having a successful marketing function, right? You talked about these different channels that you market through. Well, even if you know what those channels are, but you're not clear at what you're marketing, what you're offering, and to whom you're offering it, it's going to be very difficult to be effective.
In terms of marketing efforts, right, through your experience, how does that work with your team? What do you normally recommend in terms of marketing efforts?
Well, first, again, we start with the business fundamentals. What are you offering to your customer segment? So we start there. And then we use this structure, a marketing structure that we call the prospect preference continuum. There's other names for it. Think of it like a buyer journey is another kind of name for it. But the idea is to understand that buyers, your potential clients, fall anywhere between being totally unaware of who you are. You don't exist to them yet, so they're totally unaware of you. They could become aware of you. They could consider you because they know about you. They are interested in using you, and then they prefer to use you. So there's the continuum from unaware, don't know you exist, to preference. They know you exist, and if they need this service, they're definitely coming to you. And so what we do is help businesses understand that this continuum is where the market is, and your marketing efforts are meant to move buyers along that continuum. So you end up having strategies to move unaware to aware and aware to consideration or preference, or from consideration to preference. So you're trying to pick up folks along that continuum and move them further towards the preference side of that continuum. And as marketing does that, and those people come out and become leads, they're further along that cycle. And when they pop out, it's easier to close them, right? So when you talk about referrals are easy to close. Well, why is that? Well, those people who are your referrals, who are getting referrals from existing clients, are aware of you. They're considering you. They are even interested in using you. Why? Because someone they trust has told them, you're good at doing this. So referrals work well because they move people very far along that continuum. General marketing, just that digital marketing that you were talking about, primarily is moving people from unaware to aware. If they become a lead at that time, it's still hard to close them. It's okay to get them as a lead, but you'd like to move them further along. So maybe your website has content on it that once they get to your website, they're not only aware of you, but you have stuff on the website that speaks to them and helps them move further along. You're now in consideration or interest, maybe even preference. Maybe your website's able to do that. But once you see that that's what marketing is supposed to do, is move people along this continuum, you can start to slot these different kinds of efforts and position them to do what they're supposed to do. You can't really expect that digital campaign to move from unaware all the way to preference. They're just trying to move one step, two steps along that path. So that's one of the ways we help organize the ideas of what kinds of marketing things should we be doing by putting it into this structure.
And as it relates to sales, what's the top one or two pieces of information you can share with us that you think really helps a lot?
Well, sales is interesting. First of all, marketing, sales, and customer service. That's business development. Depending on your business model, your business might invest more in marketing or more in sales or more in customer service. So there's not it's not like all three get the same amount of energy or investment. They may not be of similar importance. But in sales in particular, one key there is our structure there is what we call the sales pipeline. It's just having a structured process for when a lead is created. What do we do with that? Because a lot of times marketing gets a lead and then it just disappears, right? It never gets picked up and properly walked through the pipeline. So the idea is to think through your pipeline, know who's responsible, what are the steps, and then find ways to improve it. Because without having a pipeline, the sales pipeline, process in place, you can't improve. And that's what you want to do in sales, is make a repeatable process that everybody knows how it's done. And it's not dependent on any particular magical personality, so that it's scalable. But when you start to break down sales a little bit more into a process, you can start to see, oh, we dropped it here. Okay, let's make that better. And let's make it better across the team. So it becomes what we call a scalable and an improvable process. You can improve it over time. So that's a big part of sales. Now, there's a lot of sell techniques that are important and can improve your sales, and you should look at those. But having this basic structure is critical as well. And that's kind of where we focus more on, is just making sure you have this scalable, improvable process.
Yeah, there are a lot of businesses out there, as you know, that where the business is really dependent on the owner. The owner is kind of doing a million things. So how do you help? And if owner who's listened to this of a business and says, I'm doing everything, or this business can't run without me, what do you advise in those?
Well, this is where we would say what you're looking for is you want to have enduring structure in that organization, in that business. So it does take a process of kind of downloading that business owner's knowledge into a process, into structures. So the business owner may know what offers there are, what their customer segments are, but that business owner may never have communicated it. It's just intuitive. They think it's obvious, but the whole team doesn't know that. So that's one of the ways we help, is by bringing language in these like containers, if you would, to put that knowledge in. And once you kind of take that out of the owner's head and put it into these containers, then everybody says, oh, this is our business model. These are our revenue groups. These are our customer segments. And there's a lot of clarity there. And it takes off a lot of that owner dependency. Same thing with marketing and sales and even customer service. You can create structures that endure beyond the business owner. And the reason why this is so important, I think I'm the same way. As a business owner, I like being challenged. I like being busy. The stress is just part of what we love as entrepreneurs. But when that business is owner dependent, the value of that business is significantly less. And that was one of the big multipliers of our business. It went from an owner-centric business in stage 1 to an enterprise-centric business in stage 4. And because of that, we 10x the value of the business. And I would say at least half of that gain was the ability or the transition from the business being dependent heavily on me to me putting in and sharing this information and the vision and the plan and the strategies with the whole team, so that when I left that business, the business was still operating. The team knew what to do. They knew the values that we believed in. That wasn't me that was doing it. It had been absorbed into the DNA of the organization.
Love it. Love it. In terms of owners that are founders that are thinking about exiting their business, right? What's top 1, 2, 3 pieces of advice that you can give them?
Well, I find business owners that are looking to exit kind of are in a couple different camps. One camp is, I'm tired, I'm done, I need to get out of the business. So it's almost like I'm a little bit claustrophobic. It's like when you're in the plane and you're on the tarmac and it's not going to take off for a half an hour and you just kind of feel that closing in on you. I think sometimes business owners feel that kind of that wherever they are, like 10 years, 20 years, 30 years into the business, it feels so confining. They just have to get out. And I don't know that I can change that perspective. I understand that. I relate to that. However, if you can hang on for another 12 to 24 months, you can have a dramatic impact on the value of your business. I've seen it. I've done it. I've done it for multiple businesses. So I would say, just where are you in that process? Do you have to get out? If you have to get out, that's your decision. But if you can invest another 12 to 24 months into that business, you could have a much better business. And really, it's about, I think your biggest value gain is 2 places. Obviously, improving your financials, but some of that's a lot of baked into the business as it is. But I would say, secondly, try to make the business less owner-centric. Find ways to get these structures in place, get what's in your head down on paper. And I think that's one thing that the ReWild group does a great job with is helping with that extraction process to get that out there. And once it's out there, then it's really able to be communicated to the potential buyers, right? You can say, this is our strategy, as opposed to, I'm just here running the business. It seems to work. Do you want to buy it? It's no, we really know our business well. And that will do two things. It'll increase the value of your business noticeably, but it'll also actually give you a better chance to actually exit it. Because there's, I think the statistic is 80 to 90% of the businesses that go up for sale never actually close. They just lock the door up and the owner walks away, which is a shame. So anyway, those would be the two things. Know that you can make a difference there at the end without a lot of money. It's not a huge investment, but it does require you to get what's in your head down into something that can be communicated.
So those businesses that are owner dependent, what is the best way to remove that dependence on the owner?
Well, you're never going to achieve that until you can delegate that work, right? And the only way you can delegate it is to create a process or a structure around that. And I'm not talking about step by step and things like that. Sometimes just a simple flow chart or a process map is enough to communicate it to the next person. And one of the rules of thumb I've lived by, I think it comes from John Maxwell, is that if somebody else in your organization can do it 80% as well as you can, you should be delegating that. So that's the 80% rule. And to get them up to that 80%, yeah, you're going to have to train them. You're going to have to document how you do it or what needs to be done. But just think of all the time that freed up for you if you can do that more, right? We teach this idea of what's important versus what's urgent and being able to distinguish that. And an owner should be focused on what's important for them to do, that they have to do, not something that could be done by somebody else. And so, I think a lot of business owners feel that there's a lot that they have to do, but if they looked at it a little bit more critically, it's more of a justification in your own mind. Well, I have to do that because I can do it better, quicker, cheaper, more correctly. And if you can get out of that mindset to know what's important for you to do versus what could be delegated more, that's kind of the first step to making the business less owner dependent.
And sometimes it may entail professionalize the business and hiring somebody.
It definitely can be that, right? So there could be areas of specialty that you just owned for a long time and you're comfortable with it. And I would say outsourcing, hiring the next person isn't always easy. It can be challenging. You rarely get the right person the first time, so it can be painful to do. But if you understand the overall value to the business of you being able to delegate those tasks to somebody else, and that frees you up to work on the business instead of so much in the business, oftentimes there is a clear return on investment to do that.
In regards to private equity, when being approached by a private equity firm to either take a minority or majority position in your business, what are some things that founders need to look out for that's important?
Just to be transparent, I personally have not brought in private equity into the companies I own. That's just kind of my nature. I would rather own it all than to have to share, and that's why I own a business, is so I don't have a boss. And I think that's just part of the reality. When you owe somebody a lot of money, they control you. So I think that's the number one thing. There's definitely benefits in doing that, but there is, I would say, one obvious thing is you do own that autonomy. You lose that autonomy, that ownership, and maybe it's worth it in your situation. But just don't kid yourself to think that things are going to just stay the way they are after you've taken a large amount of money from people who are investing in your company, and rightfully so. They are putting a lot of capital in, and they should have a say in things. But don't fool yourself that that's not going to happen, because it will.
So last word, Matt. Matt is on you. Anything else you'd like to tell my audience that's important as it relates to what you do, ways you can help people?
Yeah, we work with business owners who love their business and just want a better business. We work with business owners who are kind of getting to that stage where it's like, okay, I'm kind of ready for the next chapter. How can I gracefully and profitably exit my business? We can help you make the business less owner dependent. Um, and then one other thing we do, which is kind of on the other side of that, is for people who are buying their first business. One of the challenges there is you don't know a lot of the things that you don't know, right? And those first 90 days post closing on the purchase of the business it's very challenging, very risk fraught. And so we have a 90-day transition system to make sure you're getting all that information. Most of the businesses haven't gone through the upfront work to make them less owner dependent. So you're buying an owner dependent business. You've got to extract all that information out of that seller before they ride off into the sunset. And so we've got a 90-day program to help with that transition period. It's kind of another way we can help kind of in that entrepreneurial space.
Yeah, love it. Love it. Matt, this has been excellent. I really appreciate your time today and your knowledge perspective. We definitely walked away a lot with this. I mean, obviously you have great experience working with a lot of founders. So I appreciate you being on today.
Yeah, Phil, always my pleasure, and look forward to working together in the future.
Likewise. Thank you.